Good afternoon, ladies and gentlemen. Welcome back to Young Money Investing. It's Sunday afternoon, so you already know what time it is. It's time for my weekly market prep. This is where I go over some of the major US stock markets so that you can kind of get a better understanding of market structure and price action trends so that you can make better trading decisions and ultimately make more money. If you enjoy this content, please go down and click that like button. It really helps me, really helps let YouTube know that this is good content. They should be showing it to other people, which is the ultimate goal because I would really like to grow this channel. So please go smash the like button. It takes like 2 seconds, doesn't cost you anything, and let's go ahead and jump into the charts. Alrighty, so we are starting off on a daily time frame looking at the DXY, the US dollar. You can see that we did push up here into this green area. I'm actually going to go ahead and make this red because it's resistance right now. So we'll go ahead and make this area red. You can see that we had a big strong push off of the support level at 101.62. Push up, kind of wicked around a little bit, and now it does appear that we are moving lower. One thing I'd like to draw your attention to is the RSI down here. You can see that we kind of made a peak here Thursday, Friday. Didn't really beat that peak, even though price action was kind of wicking higher and ultimately started falling off, fell through this yellow line, which is a moving average, and continues to make lower lows on the RSI. So even though price action is not quite falling off that severely yet, I think you will see it possibly this week as you have some very slight RSI divergence. I mean, price action is moving lower, but not quite in the manner that the RSI is moving lower. So I think you will see some more downward movement here, possibly down to this 50-day moving average. We could come all the way back down to this support line at 101.62, but I think that this 50-day moving average is probably a good place to start looking for maybe some type of support to step in. To the upside, we have the top of this channel acting in confluence with the 200-day moving average. I don't think we'll see that this week, but you know, if you see some type of spike, maybe a very bearish wick or something, I would expect it to tap out right around that 105.5 level. Jumping over into the Nasdaq. The Nasdaq has kind of been popping off. Last week, we'll switch over to a weekly time frame. Last week went up about 1%. Previous week, another 1%. The week before that, 3.5%. So really strong performance from the Nasdaq. This is going to tie into the trade of the week, which I will get to later. But year to date, the Nasdaq is up, well, from the low up to where it's currently at, 37% over 5 months. Absolutely phenomenal performance from the Nasdaq. If you zoom in here, we did get a gap up from Friday. It does kind of look like an exhaustion gap to me as a technical trader. You have a pretty long wick above it. You got the gap up. If we take a look at the volume here, volume wasn't really that high on it, so maybe you're safe, maybe you're not, but either way, I mean, something to keep an eye out for. It has been running very hot for a while now. We are kind of getting this gap with the bearish wick. There might be a reversal in the near future. I think that we'll probably fall back below this 13,843 level, possibly even all the way down to this 200-day moving average, which would represent a fall of about, let's see here, about 16, 17%, call it 17%. So a 17% decline, possibly in the near future for the Nasdaq. I could be wrong. This could obviously just keep going up and up and up. I mean, the markets are irrational. I know some people think they're rational. They're not. They're irrational, and they can stay irrational longer than you can stay solvent, which is a very important lesson for all traders to learn. So, just some things to keep an eye out here. We are still above all the moving averages, getting a little bit extended from the 20-day moving average, and obviously very extended from the 200-day moving average as well. Jumping over into the Russell, The Russell has had a very strong week. You can see we broke out of this consolidation channel. Finally, the Russell was stuck in that for, let's see, March, April, May, yeah, about 3.5, 4 months that, about 3 months that the Russell was stuck in this consolidation channel. Finally got the breakout. Looks like we're getting kind of a very slight retracement right now. I don't know, this might come down to about 1835, or this might be it, and it might just keep going up to that 1923 level. This area though, right here, this 1923 level, that is a very, very interesting level for me. I am super excited to see how price action reacts to this level. Are we going to get rejected again? Are we going to see an actual breakout of this level? Zooming out here, you can see that we've been stuck in this level for over a year. We haven't really been able to break above it. Kind of false breakout here, false breakout here as well. So 2 false breakouts so far. You know what they say, third time's a charm. So I'm very excited to see how this plays out. You might see it this week, you might see it next week, but it is going to be in the near future. So keep an eye on that. The other thing to note is we do have our 20-day moving average has crossed through our 50, coming up on our 200, so those are some bullish sentiments as well for the Russell 2000. I think that there is at least a little bit more upside, at least up to 1923, and then possibly even above. Jumping over into the Dow Jones. Dow Jones just kind of continues to work its way higher, back up to that 345 level. We were trapped in this downward channel. You can see we have a breakout, kind of a retest, and then another move up. RSI is a little funky looking. I'm not quite sure how I'm going to read that just yet, but I do think that it is going to come up to that 345 level. I'm not sure that it's going to break through, at least on the first attempt. We might get kind of a false breakout and then maybe a retracement down to this 50-day moving average or the 20-day moving average. If it does just reject all the way back down, it might come back down to this 580 level. That is, of course, a possibility, but you know, you really can't tell. The Dow Jones is sitting a little bit in no man's land right now, so unless you get a really clear, obvious entry signal, I would just kind of leave it alone for right now. But other than that, not really too much to report. All of our support and resistance lines remain intact. Not really any moving average, crossover divergence, nothing crazy. So really the Dow Jones is just kind of sitting there. So we've gone through our indexes. Let's take a look at my trade of the week. This one is going to be a little bit different from previous trades of the week. So going back to the Nasdaq, which I just spoke about, this exhaustion gap, a 37% gain year to date, and you know, a possible reversal on the horizon. What I'd like to take a look at is the VXN. So if you guys are familiar with the VIX, the VIX, that measures the volatility on the S&P 500. The VXN measures volatility on the Nasdaq. So you can see here there's kind of crazy wicks. This is not a stock. This actually measures volatility across the index. So it doesn't trade like a normal stock. You can't just buy shares of it, but you can buy options on it. Please note, options are a risky instrument. If you are not familiar with options and how they work, this trade is not for you. Please be smart with your money. Don't do anything stupid. Options are a completely different beast from stocks or futures or really anything else. So, you know, this is a high risk trade. I really only recommend it for intermediate or advanced traders. Just wanted to put that disclaimer out there, and always remember this is not financial advice. But with the possible reversal on the Nasdaq and the VXN kind of trading at, you know, some really low downtrodden kind of interesting levels, and we'll even zoom out to a weekly time frame here. It's not often that Nasdaq kind of trades, or the VXN trades down at these levels. So the trade of the week is kind of a hedge. I would look at call options on the VXN or a bullish spread, a bullish call spread. If you don't know what that means, then like I mentioned before, this trade is probably not for you, but that is something that I'm going to be taking a look at. I haven't quite identified a proper setup yet. There's a lot of analysis that has to go into trading options. If I do, I will of course drop a short alert you guys, let you know the position that I'm taking, and so you can follow along if you so choose. But once again, this is not financial advice. Really simple. We're looking for call options on the VXN to possibly capitalize on a retracement or a downtrend in the Nasdaq, because I think the Nasdaq is kind of overextended. It's kind of overdue for a retracement, and so I think that this is maybe the best way to play that. Along with some other fundamental things that I'm not going to bore you with, but I think that you have a pretty solid risk to reward here, which I can't exactly quantify because this is measuring volatility against an index, and it's really hard to break it down here. But if I do take a position, I'll let you guys know. Until then, do your own analysis. If you think the Nasdaq is going to retrace, this is possibly a good way to do it. You could of course just buy a put option on the Nasdaq, but I think that this is a slightly different way to play it, and I think it's super interesting. So thank you guys so much for watching. Please go down, smash that like button if you enjoy this content. Let me know that you appreciate it. Let YouTube know that you appreciated it. I hope that you all make a whole bunch of money this week. I hope you smash all your trading goals, and I will see you all next time. Peace out, homies.